Asian markets traded mixed today, with some bourses following the lead of US equities from yesterday, with Australia's bourse jumping by over 1%. However, a pullback on Chinese and Hong Kong equities brought down overall gains. Japanese players were out on a national holiday. The Hang Seng Index declined by 2.23%, while the Shanghai Composite Index was down 0.51% at the close. US equities edged higher on Wednesday in the run-up to the US Fed Reserve's announcement on rates. It decided to keep rates on hold, citing higher inflation concerns, while downwardly revising economic growth. Despite this, tech and consumer discretionary stocks led the charge, with all three indexes closing in positive territory. The Dow Jones Industrial Average rose by 0.92%. The S&P 500 gained 1.08%, while the Nasdaq Composite Index jumped 1.41%. In terms of our local indicators, we see that the all-share index is currently trading in negative territory after a really good showing yesterday, where it breached the 90,000 index point mark. On the currency front, we see that the rand is trading at 18.22 against the US dollar, 19.75 vis-a-vis the euro, and 23.58 against the British pound. On the commodities front, we see that gold is trading at $3,028 an ounce, platinum at $985 an ounce, Brent crude oil at $70.72 a barrel. All right, let's unpack the markets now with Muhammed Wagley. He is a portfolio manager at Sasfin Securities. A very good afternoon to you, Muhammed. So the US Fed cautiously kept rates unchanged and is seemingly warning that stagflation could be a thing. Perhaps you can unpack for the audience the meaning of stagflation and how it differs from recession and what it all ultimately means for market valuations.
Good afternoon, Nompu, and always a pleasure to be on the show. So, yeah, I can unpack that with pleasure. So, very simply put, stagflation is a portmanteau of stagnation and inflation. So, essentially, there are three factors at play here. So, we're looking at high inflation, slow growth, and then rising unemployment, all hitting at once. Now, needless to say, for Federal Reserve or reserve banks in general, it's quite a challenging situation because the sort of the usual tools that they use to combat inflation don't really work. If they raise rates to fight inflation, that slows growth even further. And then if they cut rates, that could make inflation even worse. So it's a bit of a vicious cycle here. Whereas recession, on the other hand, I think, the dictionary definition there is 2 negative quarters of GDP growth. But effectively what we're looking at is the economy shrinking for 2 quarters. It's a bit easier to address that. I think usually what the reserve banks will do is just lower rates, and then that boosts growth. With stagflation, on the other hand, that makes it a little bit more difficult. That could backfire. And I think for markets in general, it's quite bearish, it must be said. Growth stocks in particular tend to struggle. Bond performance generally tends to be mixed. So in that context, there's quite a bit of short-term pain. And if growth isn't addressed, then could be long-term pain as well. So generally what investors do here is sort of flock towards instruments that can be viewed as a hedge against inflation. So things like gold and oil do quite well. But I'd say the bottom line is that, stagflation pressures market valuations immensely. And it does make investing sort of as a whole viewed as a little bit more risky. So what the Fed does going forward is going to be absolutely critical. Definitely one to watch.
Yeah. So as we talk about the Fed, let's talk about the Reserve Bank. They're set to make their call on interest rates this afternoon. What do you expect them to decide? I mean, the general consensus seems to be a pause, but some people believe that there's still a lot of space and room for the Reserve Bank to cut.
Well, look, I definitely won't disagree with that argument. I think there is quite a bit of space. If we look at sort of where inflation is, we're at about 3.2%. That mid-range target was at about 4.5% as well. But I think what's going to be on sort of the forefront of the Reserve Bank's thinking is probably global factors. Much has been made of the US trade tensions and the capacity for those tensions to be inflationary. And I think they're going to be thinking about that. So broadly speaking, I think I'll lean with the consensus here. I think it's going to remain unchanged at 7.5%.
So our local market hit over 90,000 yesterday. It's now gone below that. That was an all-time high. Was that just a blip, or are there factors that you think that could see us continue on that track?
Well, it's an interesting one. You know, if you look at what the JSE has done on the year, we're up about 7%. I don't think, anyone would have seen us perform that well, especially given what's been going on over in the US and the tensions thereof. But, if you look a little bit closer, we're seeing some of the heavyweight companies, driving a lot of performance. I think much has been made of Naspers and Prosus doing really well in 2025. But in addition to that, I think with reference to a little bit more recently, we've seen some respite from platinum stocks, which have been doing well. And then needless to say, gold has been phenomenal, also at all-time highs. So I think there have been sort of pockets of success, pockets of good performance, but it's been concentrated to sort of those areas. One has to consider that there's quite a bit of uncertainty prevailing in the market currently. And things are always liable to sort of take a little bit of a dip. I would say, just in terms of your question on how likely this is to continue, if this rally that we're seeing was a bit more broad-based, we're seeing sort of all the sectors higher, I think it'd be I'd have a bit more conviction that, this would continue, at least in the short term. But because it's being driven by, a couple of massive companies in specific sectors, I think it probably raises a few questions as to how sustainable that rally is. I wouldn't stick my neck out on the line and say that that's going to continue. I think we've seen some really good performance from some of those companies, and maybe with the exception of gold and perhaps platinum now, given the weakness, I wouldn't feel that that's going to continue for the broader market. Definitely not the case.
Yeah, well, that's a fair answer, and thank you for breaking it down for us. That was Muhammed Wagley. He's a portfolio manager at Sasfin Securities.